All right, good morning, team. Hello, everybody. Welcome to the Math Effect Private Mentorship. This is 151. What a beautiful week is upon us, and what a beautiful day is here today. Welcome to the team, guys. Welcome, Mitchell, Carson, Shellings. Good to see you, Fat Tony. Oh, that's our new member, I think, right? Relatively new. Good to see you too, man. Good to see your face here, Mitchell, Troy, Lagash, Valley. Shizen, as always. What's up, man? Oh, Lay, Aid, Onions, Shaggy. What a pleasure. What a pleasure to see everybody here. Not going to read all names because that would be a little bit wild. But that's all good. Prolific says, I've been binging the webinars on 2x and Antoine speaks slow as heck now. That's how it goes, man. I can't 2x it in real life, you know? Second webinar for show off. What's up, man? Good to see you here. Excited. I'm happy to hear that. So before we jump into anything today, it goes without saying that each and every webinar, so one, if you're brand new, welcome. You should be showing up to these. So the fact that you're here today is a very, very good thing. You're basically, you're doing what's right. The way I kind of like to think about it is if you're showing up to these, you get to see firsthand at any point that you start, even if you go through the most recent 10 to 20, if you are new and you'll end up going through them, you get to see firsthand how, in the real world, in the real time, how we're using the exact things that you're learning right now, and how we're using them every single week, how the psychology regarding using the things that we use changes week to week, how the analysis of a given market changes week to week, how we might have a bias and follow that bias, but not necessarily take trades week after week. And I think a great way to start today's webinar is actually to talk a little bit over this past week and in regards to, the concepts that we used, the biases that we had, and the things that actually ended up happening. So we're going to start with two simple things. The first thing is where this is not going to bother you as much, and the second is where it is going to bother you, or it's going to apply to you. But at the same time, it may apply to you even if you meet the first criteria. So the first criteria, number one criteria, is the idea of being a lower time frame trader. Okay. Suzanne says, is it lagging on me or are you guys also facing some issues? How are you getting lag right now? What kind of lag are you getting? Is there lag, guys? It's all fine? Fat says there's lag, something like that. Okay, we're gonna leave it as is then. Clipping. It's clipping on Zoom. Yeah, Zoom's a shit company, guys. I don't know what to say about it. Again, as I love to show you guys. All right, there's a reason that this company, okay, it's dog shit, okay. All right, this is what happens. This is when I started disliking Zoom. This is when I started dumping shares because I knew it was gonna be shit, and now look at what Zoom is. Okay, don't make me upset. Don't make me angry. I'm just kidding. I didn't have anything to do with this, but it makes sense why Zoom is doing a little bit poorer. Now, guys, if my actual face is lagging because of and you're watching me and it's lagging, just ignore that, okay? You don't have to worry about it too much. What really matters is what's on here, okay? So just remember that. So the first place that I wanted to start today, so it's actually twofold, right? One is being a lower time frame trader. So I'm actually someone told me about this anchor text. Okay, one is being a lower time frame trader. Now, when we talk about being a lower time frame trader, this is generally going to apply to traders that are using basically for entries to enter. So as you guys know, we have, okay, so for people that are new, I want to make sure everything makes sense too. We have a formula for determining our general timeframes that we're going to be trading, right? So you have the entry timeframe, the validation timeframe, and the context timeframe. And then we have rules between these that you use to determine which ones you should look at to make the overall system make the most sense. And I'm actually putting together a from beginning member section portal course kind of thing right now, and this is going to be in there too. So the new people that are here, you're going to have a much easier way to work through a lot of stuff very shortly. But nonetheless, when you're a lower time frame trader, we're talking about the entry time frame, the time frame that you're actually entering your trades on, being basically a sub 1 minute or equal to. A sub or equal to 1 minute. So what that means is that your execution time frame when you're ready to enter something, or after you've done some analysis, a good bit of it, and you go down lower, your entries on the 1 minute, 30 second, 15 second, 5 second, like these lower time frames. And the thing about entering on such a low time frame is that you actually get a lot more entries. You have the opportunity, as we like to call it, for a lot more entries, right? Which means, as a lot of you might be able to tell from the stuff that I taught a while back, a long time ago, the way I used to trade, what does it mean in regards to the markets that you watch, how many markets you watch, the ability to watch markets and caring about their much higher time frame context? The reality is, because there is so much action on these timeframes and sub these timeframes, you can theoretically get away with trading a lot less markets and still get relatively good entries, with the exception of extremely shit times where stuff is just going back and forth and back and forth. Because during those times, what's likely to happen to even a lower time frame trader? If something is proving to move in a very unpredictable back and forth, huge wicks up, huge wicks down, money comes up, money comes down, the market starts to move higher, instantly goes lower, and then goes higher again. What's likely going to happen in those areas, regardless of the kind of time frame trader you are? You're likely going to get stopped a few more times. You're likely going to get chopped up, right? So when you're a lower time frame trader, that's a benefit that you theoretically start to have, because there's much more tradable action, right? On any given day, you are going to have moments in time where you still have some sort of trend. On any given day, you're going to have some moment where there's some kind of trend. On any given day, there's going to be some moment where there's some kind of trend. On any given day, there's going to be some moment where there's some kind of trend. And theoretically, based on the way that you're looking at your EVC timeframes, okay, you'll be able to capitalize on that. However, as we are traders, and traders, by and large, from a standpoint of what we do, want to get better and better at making more money for likely less time. What over time happens, and as we scale our accounts, is we begin to move to a time frame that makes more sense in regards to being able to sell a bit more back, to have less commission or slippage based issues, to give us to an area where we stand to make potentially more money by doing a lot less work, but also can make more money over a longer term period of time, right? And now the problem that comes into doing something like this, or even with anyone that's any kind of trader, is what we get to with basically contextual markets, okay? And this is where, if a market is not in context and you're trading it, what is the likelihood of the consequence or the occurrence of any given trade? It's a loss, right? It's a loss, it's a chop out, or it's a very minor, if you're lucky, move, okay? And the likelihood is that you start to take on a lot more losses, right? Because when you're not trading contextual market, you basically you basically are looking to not make money on a bigger move, right? So the idea of this is, if we look at something like even oil, right? So oil, this is oil right here, is something that I've been, actually this is not terrible for the downside at least, but like back here, this was a decent example, okay? Because, actually no, it wasn't. Okay, well, the reason it's bad, maybe on Euro USD, we can look something like this, okay? So the reason it'd be really hard on something like Euro US dollar, which we know has been going sideways a lot recently, is that no matter where you kind of aim to place a trade, right, and whether you get it right or wrong, the occurrence is almost always the same. You don't get to play out the trend, right? So the way that I've always taught you to think, and the way that I want you to start to think about trend, is that, if this is going to start a big uptrend or a big downtrend, right, that's going to become pronounced at some point, okay? And at that point, right, the reality is, the question becomes, would you rather enter this trade or this trade here, right, for the potential of such a big gain, but at the same time have the likelihood of 16 to 20 more losses before one of these moves occur? Or would you rather enter this kind of trade right here, where the likelihood is that you're either wrong once, so you take one loss total instead of 16, or you're correct once, right? So then you begin to start to see that, having a market and just having a market open or having a bias on it doesn't really matter so much, as much as the actual execution, as we love to say, right? So executing something on this doesn't matter unless it's already delivering. And even if I do execute, what do we know is going to happen? I'm going to take up to 16, 20 more losses before I might get it right or luck out on the direction. And as a trader, one of the biggest questions that you have to answer for yourself is, are you in this market to make money, okay? Or are you in this market to luck out on a place trade? And those are two very separate things, right? So for me personally, I'm here to make money, right? I'm not here to play bullshit games. I'm here to protect my downside risk in a very large way. I'm here to make a ton of money on the upside when it's delivering in my direction. I'm here to make money on the biases that start to deliver, right? And I'm not here to analyze a market, go, damn, I really want to be in this market because it might make a move, and take 16 trades because now I'm in a move and I'm doing it right, and take all losses, right? I have no interest in that because I'm not here to basically just be in trades, right? If you came to me right now and said, Anton, what trades are you in? The answer is 0. I'm not in any actual trade at the moment, funnily enough, right? But if you go to any other potential signal provider or anything like that, there might be a chance that they're in a number of trades, even on, for whatever reason, like I'm long this and this and this, and I'm right here like on it. Unless they're swing trading, which is fine. If you're swing trading and looking more longer term, like looking at daily charts, you're going to be trading more often because there's going to be a lot of opportunities, large amounts of markets to look at. So that's a little bit different. So we're not going to go into that. But yes, as you up your time frames, as you scale, what's going to happen is you're going to start to look at a lot more markets. Right? You're going to start to analyze up to thousands, 2,000, 10,000 markets. You don't have to look at all of them, which is why we have a screener. We're working on improving that right now. But you have a way to do that. Now, what's interesting about this week in regards to kind of what I'm talking about right now is that all week long, every single day that I showed up, at least in regards to just what's on my list here on the right, I would click through it every day. And I'm going to show you very quickly, all of you, what my day-to-day this entire week looked like, okay? With the exception of Carvana. I have it at the top here because I did trade this, as you guys might know, and I actually only took a little bit of money on it, and I missed this move because of the fact that earnings were coming out that night. So I closed out, but whatever. We'll talk about that in a second. But for the moment, just to show you guys an idea, this is what every day to me looked like, okay? Are you guys ready? These are all things that I've had some kind of bias on maybe in the last few months with you guys and everything. Here's what my day-to-day looked like. Okay, let me see what oil's doing. Okay, I know I was bullish on this. It's moving bearish. Okay. Nothing yet. Maybe later. Nothing at all. Yep, useless. Yeah, Euro, I was looking bearish, but now it's going up. Don't care. Don't know what it's doing. Probably 50-50. Gold still sideways, going all over the place. Don't have anything to touch. Silver, same thing, just chopping around. Soybeans, I was short. It's moving long. Don't really have much to do. Oil, same thing as earlier. This is a stock. Doesn't really matter. EJ, same as CJ. Nothing. Coffee was bullish, clearly moving bearish. Might get a trade bearish, but I'm not going to touch it because I'm not here to play the opposite side of the context. Cocoa was bullish, had some really nice bullish trades here. Now it's bearish, don't have anything to touch. And I did this even quicker when I show up, but I'm just showing you guys basically with explanation what happened this week. Looks like CJ and EJ and GJ. Pretty sure I was overall bullish on this. Now it's moving bearish and was choppy anyway. Don't have anything to touch. Nothing to touch. Potentially something on a higher time frame. Maybe watch this upcoming week. Nothing. NQ, a lot of sideways action. Maybe can start setting something up later next week, but nothing here. And that's basically it. Everything else is in chop. NZDGPY, GJ tried to trade it one time this week, instantly invalidated, and invalidation went for a beautiful flush out that a lot of people were confused about. And that's it, right? So what do you see just happened every single day of my week? Just so you guys know, what I just showed you guys happened every single day of this week. I opened up the charts, and one look through, even in the morning at any point, I could tell that this is not showing up. This will not make a move until tomorrow minimum. And I'd come back the next day and do the same thing. And everything continued on either a flush out of the opposite side of its bias. So this is very important. So if I'm bullish on something, all that I saw happen this week, and a lot of you probably saw this too. If I'm bullish or bearish on something, let's just assume I'm bullish. Every single day that I showed up, okay, every single day that I showed up, price was either doing this or more likely was doing this on my time frame of entry. So again, what's happened, or what I see happen, is that a lot of people see this thing right here and they start to wonder and FOMO into the fact that they might be missing out on the reversal or on the new start of a trend or whatever it might be. But the reality is a new trend is not going to start until this thing right here truly flips. And we're going to see that happen, and then money's going to be available, and then big money's going to get positioned, and then we're going to have a year or more of a run. So it's all going to be available there. But the problem is people get carried away, and traders get carried away by this thing right here. They start to see any week, like this week just now, where everything is going against their actual bias. And they think that, okay, you know, I'm going to start trying to get positioned bearish because clearly it's moving bearish. When in reality, well, the market hasn't actually shifted in any way. The only thing that's happening is there is, what do I call it when this happens across time frames? So you can look at me now. Yeah, it's a clash. Right? When you have markets across different timeframes clash into the directions that they're heading, what you end up in is people forcing longs or shorts on their respective timeframes at any given point and getting stopped out on all of it and then foaming into the other direction or doubling down, and all of it leads to zero because both of those systems of averaging down or of trying to get the opposite side, even if you're right short term, end up in full disaster long term. So all those people are ensuring that long term they make no money. Right? That's a huge problem. You need to recognize that if the delivery of price or the entry time frame criteria setup is not in direction of the actual bias, there is nothing to do, right? So let's actually not just talk about it, because I know I talk a lot sometimes. Let's actually look at live examples of this happening, right? So live example wise, a lot of these last few months, weeks, we've been following, as you all know, Bitcoin. Bitcoin has been generally very bullish. Now, recently, if we look at this, you can see some red has begun to show up on Bitcoin. So without even looking at Bitcoin just yet, we know that there is some sort of 50-50 happening now, because guess what? We've looked at our higher timeframes, we've looked at Bitcoin on the screener for a few times, and it's been very bullish. Now we can tell some bearishness is coming in, but that's okay. We know Bitcoin can still have a bullish setup, so I keep it on my list. Let me go to actual Bitcoin US dollar and take a look at this. So all week long, since Monday, I'm gonna show you guys this. Since Monday, which was here, you can see the models we were in. Price was already bearish. Price was already moving sideways in a longer term sideways environment. So the day I showed up on Monday, the only thing I can think to myself, and you guys can tell me, is what? Is it A, damn, maybe I can get a trade today, it might be setting up? Or do you think B, it's bearish, it's in redistribution, it's in distribution, it's moving in an unclear way, the MAs are being weird, I'm not gonna touch it. It's B. So then I wait, and I know that it's gonna set up maybe by Tuesday. So then I wait. Oh, here's Tuesday. Has the A to B changed yet in any way? Has anything about the condition of the context of the market, or at least on a 50-minute, changed in any way? Not at all. Okay, let's go to Wednesday. Here's Wednesday, guys. Has anything changed on Wednesday in regards to the bullish bias that I have on this market that is maintaining its bullish bias? Because again, I'm not using the time frame to determine that I'm going to be bearish. I'm using the fact that the market has been doing a certain set of things. And yes, right now, this might be the time, guys. Bitcoin might be rolling over for a bearish market. But has Bitcoin rolled over for a bearish market yet on higher time frames or on a higher basis of like a 4-hour, daily, 1 hour, 2 hour, 3 hour? No, it hasn't. So there's nothing for me to do on my time frame of entry because I like to see lineup at the moment. Okay, Wednesday, Thursday. Has the market condition changed? No, it's still in redistribution. It might be changing, it might be heading into accumulation, but this is still unclear distribution. It broke up twice and instantly broke down. Okay, then Friday comes along and we finally break a high. This is the only time right here that anyone that's like maybe on a 50-minute should have been going, okay, maybe we're in accumulation. Right now, we've changed elements of the story of what's going on here. Price has gotten above the MAs, price is starting to move higher, price has made a move higher, and it's doing so in an accumulation, right? It started to go through multiple breaks up, then a breakdown, and then a break up, right? Very simply, we went through multiple liquidations or break of structures to each side, or MB creations. And then the MB created most recently was a bullish one. And as a result, it is an accumulation. And our TEM, it is not a change of character. But you can call it whatever you want. I don't really care. Okay. So then, at this point, as you guys know, this could be something you're watching. There could be an opportunity in here. I don't know if one sets up. You can see this was potentially nice, but then just broke down. I mean, this is not terrible right here, but it looks like it's breaking down. So this was fine, but then again, it broke down, so nothing to touch. Okay. This was okay, this high, but I would have given it a little bit more time, so that's fine. I'd wait. This is very nice. Whatever this is something that I actually would consider. Oh, this is something that I would consider trading, but wait, I just realized this is a Saturday, and I don't trade weekends, okay? But this looks like it would be a break even anyway. Nonetheless, all week long that I showed up, this is Saturday and Sunday, all week long that I showed up, that's it. So John says, can you review Bitcoin price action from this week? So John, I ask you, what did we just do? Oh, this was, oh, I'm sorry, okay, sure. Oh, okay, you're right. Okay, so around comes Monday. I'm gonna go through the actual price action that I'm watching, which is GBTC. So again, it's just a stock of Bitcoin in terms of when it trades. So that's what I'm gonna look at. Monday 22nd. Monday 29th. Okay. So this is what I saw this week. Every day that I showed up to watch Bitcoin. This was Monday. I have nothing to do. Tuesday comes around. I have nothing to do. This was every day. Wednesday comes around. I have nothing to do. Thursday comes around. It's in accumulation, but there's nothing to do. Friday comes around. Price finally makes a move. Price starts a move. There's an impulse out of this move. The underlying institutional structure is very, very poor. Nothing is there at the moment. We can see how this shapes up. And that's the end of Friday. That was your entire week. So, same as last week. Really. Towards the end of the week, the 30-minute improved. The accumulation is not too early to look at, but I don't have a trade, an opportunity here. Dan says thoughts. Bullish. Bullish. Everyone is bearish. It's funny. Nice. That's great. That is pretty good. Oh, it was fake Dan. That's fake Dan. Sorry guys. Fake Dan. So for me, like on Bitcoin, there's been nothing. I mean, there's not been a thing to buy or sell. Maybe you can make an argument for this ICI, and then market opens. Oh no, this wasn't even market open. Market opened up here. So yeah, there's nothing for me there. I'm gonna scroll up to all the questions in a second, guys. Don't worry. The only thing that maybe goes is like this ICI, maybe. Or a CS through this high or this high. Those are the only opportunities this week. But that's, and like, I don't know, what does that line up with on Bitcoin? That probably lines up with, where is it? Where's my thing? So that probably lines up with, so we need to look at Friday. So Friday starts. So that lines up with this ICI or this CS. CS. So those are the only opportunities I see. Otherwise, there's nothing else. Price went in, started an accumulation, played around, accumulated. Accumulation got validated, went higher, made a clear move, so at least it has some kind of starter of a move, can easily start coming up. Then went sideways, and then you go long. CS. Yes, that is buy stopping a high. Again, like a fractal MB, fractalized MB, fractal buy stop of a demand zone. However you want to think about it. If the 15-minute context time frame, would you look long at 53? I just showed you where I would go long. The only place I would go long is here. Any one of these three is probably fine. For sure. There's nothing else. I don't see a single other thing to buy, right? If you're looking at anything down here, it's too it's way too early, because again, I don't have my rules met, and this is the only time you had price go sideways. Otherwise, you're watching the actual crypto exchange, which continued to trade or do whatever it's doing, in which case there might be trades to take. But again, I like to trade during hours where money is entering those markets. I like to trade during times where clearly money can and is entering those markets. I'm not really interested in times where there is still money entering, but potentially less money entering, okay? So yeah. Before we continue going and looking over people's questions and whatnot, I just want to show you guys what my days look like every week this week. I shit you not, every morning I woke up, it was, I'm not even lying, no, maybe. And I took this thing, if you remember, on Carvana. I took this buy stop through this high, got in, partialed, and then when price was coming down right before 4:30, 12, 13, 14, 15, 16. Why does it say 15:30 here? Oh, did time move backwards or something? I don't know. Nonetheless, I closed it right before 4:30. At like 4:25, 4:15, I closed it. I closed it somewhere here. Literally, I closed the market around here. Then after market, this thing went up 30 RR. So again, I just want you to remind you that in any case that my rules were meant to hold this thing, right? What I want you to recognize is that despite a zero trading week, despite doing absolutely nothing all week long and nothing showing up and nothing happening and it being a super boring week, there was still an opportunity, not that it happened, but an opportunity that this trade here is now not 2.1, but 15 minimum, right? And all of a sudden, everyone would look at this and go, okay, wait, let it update. Oh wait, this is updated? Yeah, there you go. Everyone would look at this and say, oh my God, it's just crazy. How does he do it? He's always like moving higher. His account is crazy. Like, what's he up to? What the fuck's going on? How's he always profitable? But you know, like that's if that happened. And that was off that one trade this entire week, right? A super, super boring week. And you guys can see it kind of reflected in my own trading so far, right? My last 2 weeks, this has been my last 2 weeks, literally, right here. It's been the most boring 2 weeks you can imagine, but you can see that all that happens over time is this continues going up. And again, it took one trade and one piece of management or potential future management that has changed. And that entire curve, again, is at all-time new highs. Or I can just simply continue trading my system, and eventually this is going to happen without me closing because of red news, right? So you can see how every aspect of what can happen with my system is kind of decided, right? With like, it doesn't even matter what the fuck I do. It's like a multi-universe. Like, I don't know if you guys have seen Rick and Morty, but it's almost like that, where no matter what I do, it's all happened before, it's going to happen again. It does not really matter what happens now, because as long as I'm following just a few set variables and rules, those things are all going to occur. This thing right here is going to occur at some point in the next 10,000 trades that I take. I can guarantee you that, right? It doesn't, like, I can take so many trades and eventually one is going to do this without me closing it. And that's going to be another, full all-time high on my account. I don't know when those times are going to come. I don't know what market it's going to happen on, right? Like, this is the most random thing ever that is happening on this market. But I've had it open for a while, right? I've had this thing on my watch list for a while. And you can also see why. This has been on my watch list since literally around, I'm going to be honest with everyone here, since around here, I believe. And then since then, so like you can see this, this has been on my list for about half a year, right? And like every day, even though it's been on my list for half a year, so for 150 days, what do you think happened on it every time I clicked on it every given day for the most part? Do you think I was like, oh, it's fucking time to trade, and what's this thing doing, and what's the inducement low doing? No, I looked at it and I said, nothing to do. That's it. That was my job as a trader, right? My job as a trader is not to trade, is not to analyze so I can get a trade. It's simply to show up, look at it, and see if what I've tested, what I know works, what makes me money, is happening. And if it's not, I walk away. So again, on every single thing that you see here, every day of this last week, and for the most part for years sometimes, when I click on it, nothing happens. Right? There are things that I look at that nothing occurs with, right? Someone might even ask me about GameStop in another year or something, right? The last time I traded GameStop, I think was around here. Since then, because of the chop and the context it entered, I stopped watching it fully. And since then, do you think that anyone that's longing or shorting this is making money or losing money? Regardless of the direction they're on this. They're losing money. Price action is not moving in favor of any direction. It overall might be moving lower, but look how it's moving lower. No matter where you place a trade, okay? No matter where you place a trade, if you just randomize trade placement, almost all of them, okay? Almost every trade, entry moves back to break even or loses. Entry moves back to break even or loses. Entry moves back to break even or loses, and this is break even. Entry moves back to break even. Oh, actually no, this one actually wins. That's the only one that keeps winning. So this is my point where like you're trying to take a huge gamble in a market that's not clear and trying to establish the direction or trying to trade it, right? Because at the end of the day, you're just getting involved in hoping that price doesn't do what it's likely gonna do, right? And those people are losing a lot of money, and if they aren't, they're being rewarded for doing poor things. Right? This is where GameStop wanted to be traded, right? These are the points where here, here, here on lower time frames, here, here, maybe here, maybe here, maybe in here, 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 maybe here, but then it never went higher, and then it failed down. And then maybe you reconsidered it one more time here because GameStop was really crazy. And then after this nonsense, you just stop, right? And then you go through this. And now the amount of people that are trapped with orders up here that haven't gotten out of them because they're bad at managing, or are now just trapped in trying to determine the direction or buy this back up, will lose money likely for the next 5, 10, 20 years until GameStop either goes to new all-time highs again out of luck, out of sheer luck or company improvement, or until it again goes back down for another 40 years, right? So be ready to understand that any one market you're watching now might not ever be on your list again for another 10, 20 years. That doesn't matter. You're not here to make money off of GameStop. You're here to make money off the market. You're here to make money off your edge. All you need to do as a trader is locate the tradable moments for your edge and execute on the things that are showing up. Which is why, as you guys know, we're adding and working on adding a fuck ton of things to these points here, right? All these stocks. We're going to try and add futures. We're going to try and add, cryptos. We're going to try and add everything we can, okay? Now I'm going to scroll back up and continue working through the questions that you guys submitted for today and just go and see like what's going on with everybody. So again, questions are always welcome. You guys know that today there is not a major breakdown of any crazy trade because guess what? It's like there's been nothing to do. Beautifully enough, because there's been nothing to do, it's given me time to start proper work on a real member backend, on a very real member backend for all of you that's going to work through from the very beginning what we should be focusing on. And I got a good amount complete. So, you know, it's coming very soon. You guys will have access to probably the starting points of that in like maybe a week. I'll probably try to get it out this week if the market continues moving the way it's moving. Because with boring markets, you have time to do whatever you do. Your side hustles, your job, spend time with friends. I don't really give a fuck. You can do whatever the fuck you want, right? Or work more on determining what your edge actually is. Right, that's what these moments are reserved for. The markets aren't here to be traded every single day. They're here to be looked at, and that's all they're here to be done with. I look at 10,000 markets a week, easily. That's my job. My job isn't to look at them and then trade them. My job is to look at them and decide if they're even worth consideration. That's it. Yeah, dude, this looks really good. Congratulations. You're doing really well. Good break-even rate, good loss rate, good win rate. Yeah. It looks good, man. It looks good. And you can see you're starting to take off on the compounded side. It looks good, man. Keep it up. Dan says, the real Dan says, just because there's a good entry doesn't always mean it's a good context. And vice versa, right? Exactly. A good entry does not mean it's a good context, and a good context doesn't mean you're going to get a good entry. Right? So this goes hand in hand with what we're kind of talking about today, where it's like there's going to be markets that move and move well and move away from you in the direction you want, and you won't have a trade. That's fine. If your trade is not met, there's nothing for you to do except to watch that market go. I don't care if if every single person here caught the next big move on something crazy because they were told by their professor, their parents, whatever, to buy a certain stock, and every one of them made 1,000% on that stock. So this is what's interesting. I want to ask a question to maybe all the profitable traders here. You know, if everyone around you caught a stock and they were just told to buy the stock online, and everyone was telling you to buy this thing, and everyone bought it, and they made 1,000% on it overnight, would you have cared if you were not in this stock as well? So this is more so for the profitable members, but you know, anyone can answer this. Exactly. You know, Schelling says no. Ole says no. Dan says no. Good for them. I agree. That's really all it is. King says not really. Exactly. Because at the end of the day, we're not interested in moments that are determined by pure luck or by the speculation of others. That's it. Because we know it's not consistent. We know that 1,000% is actually worth negative 100%. Because over time, the same actions will result in zero gain and more loss. We know that there's no reason to trade something that might be even really clean if we didn't get our entry. Because again, that's the only thing that's proven to make us money. I don't make money because I listen to other people. I don't make money because I follow other people. The reason I make money is because I take a trade when I want to take a trade. That's it. That's as simple as it works for Anton. It goes the same way for any funded member here. People don't make money because someone else told them to make money. People make money because they followed a system and then they kept following the system. And that's it. Right? So it's very important that you realize two sides of the coin, right? Which is trading. Where was it? Yeah, what Dan says, but double it, right? Double it and give it to the next person. Just because there's a good entry doesn't mean there's a good contextual trade. And a good context doesn't mean you're going to get your entry, right? This is really the fundamental rules of the market right here. Good entries don't mean shit without a proper context behind them. And a good context doesn't mean much if your entry doesn't show up, right? I can tell you all right now, okay, that likely the context of NAS and NZGGY and this are really good, and they're probably delivering. But it doesn't matter if I'm not in it. So at the end of the day, it's not a market that's even worth my time because I didn't get into it, is the way I think about it. And I don't care how high they go. All of these can go, you know, NAS 100. You know, this thing can go to all-time new highs again right now and be up here. It could be at 23K and I won't care, right? The amount of people around me, just so you guys know, that have been so happy with their returns, right? People that got back into this, into NAS, and you know, they've returned over 50% on their accounts. People that put $1 million into this are up 500K right now. So many people around me, and likely around you, because a lot of people are invested in these indexes as a long-term kind of thing, are very, very happy this year because their money's finally, you know, at all-time new highs. They see these crazy gains, are very, very happy. And they're looking at me like, there's no way you're not in this too. Like, this is crazy. I'm making so much money. And I'm looking at them and I'm like, dude, I'm really happy for you. Even if it goes up here, you know, I'm really happy for you. You're going to make a lot of money. But what everybody doesn't understand is that when the inevitable, not maybe, but inevitable sideways or downwards market starts, a true one, not for fun, little accumulation again. Oh, for fun, little accumulation again. But I'm talking about when the real market, normal sideways or downswing happens for a proper set of minimum, because this is a monthly chart. Nothing stops us from returning for a reaccumulation like down here to like 8K. When this starts and goes on for about 30 years, right, you're not going to be so happy with the results of what's happening. Now, can that not happen? Can it keep going up for another 30 years? Yep. It can do this for another 30 years. It doesn't really bother me. I don't care, because I'm aware that this can also happen. I'm aware of how the market functions. And as a result of that, I'm not going to be the person that wants to have my money locked up. I'm not going to be the person that's going to FOMO into moves just because they're happening. I'm simply going to trade my entry when it's met and take my edge out of the market. That's it, right? This is what people don't understand about their version of buy and hold, or like this index trading. There's nothing stopping the market from doing something like this over the next 50 years, 30 years, 20 years, and reaccumulating, or starting a short-term, longer-term distribution, redistribution, and then new long-term sideways into new accumulation. Nothing is stopping the market from doing that. Truly ask yourself, what is stopping the market from doing this? News channels? Governments? No, there's nothing stopping that from occurring. So I don't base my analysis off of the whim of others, nor do I base it off of the fact that price is just delivering. All I care about is that, are we in accumulation? Yes. Is it moving in reaccumulations? Yes. Can it move higher now? Yes. Let me look for a reason to get position on this or on stocks. Because if NAS 100 is moving long, or is telling me it wants to move long and make new all-time highs, what do you think is going to happen to the best stocks or very, very good contextual stocks? Well, that's what we call relative strength. Okay, this is also going to be taught in this remade little section that I'm making right now in the member area. But that's what it is. If this is telling me it wants to go here, then I know the best stocks, so let's say Carvana is an example, is going to make enormous moves. Guess what it already did? This thing hasn't even reached to the high. This thing that I have had on my list for months is at all-time highs, like crazy right now. And if US 100 continues, this is going to do what? And that's where I'll make my money. All right, I know what I have to do to make my money. I know what systems and setups I have to look for. And this is how I don't. This is also how I don't have my money locked up like a lot of people will. So don't worry about what other people are doing. Don't worry about what other people are saying. Don't worry about how other people are creating their investment accounts, long-term and retirement accounts, etc. Don't care, because they're basing all their information off of this. Just so you guys know, a real financial planner bases all the information of when they put their money in an index for you off of this. Hey guys, over the last 3,100 days, or actually here, there we go. Over the last 200 years, 100 years, price has returned 84,000%, which means on average, you're gonna make 20% a year. Put your money in this, and you're probably gonna do fine. And that's true. And pay me my fees because now you're doing fine. But if this happens, pay me my fees. Unlucky, you're gonna have to wait another 50 years. Have fun. Right? I'm not in this market to play that game. I'm not interested in that. I'm interested in trading my edge when it shows up, magnifying that edge by trading other stocks during that same time, because they're going to also be in great contexts, continuing to trade those stocks if they're in good context because price is proving to go long. And if it rolls over, then I know that I can look at 50 million other assets, other stocks, futures, Forex, crypto, the new AI coins that are going to come out, the digital fucking currencies of the world, water contract, whatever it is. I don't care. Something will be available to trade, and something will have a context, and a good context, because when money flows out of one thing, it flows into, say it with me, another. And that's what I'm looking to do. I don't care what market I'm trading. I just care there's money behind that market. This is how my entire system works. This is why my system works. Okay, just so everybody knows. All right, let's keep going through the questions. But yes, Dan said something correct. That's very good. Do you consider this one as a good ICI meant? Friday 03 May at 7 a.m. Euro US dollar. So already without even doing anything, seeing that you're on a 15-minute, where's my color palette? I don't know where my color wheel went, but seeing as you're on a 15-minute on Euro US dollar, I can already say I probably would not touch this. So I do not agree with it. Although, okay, so if this is what you saw, all this bullishness, a little bit of bearishness, and then you went and double checked it, because I haven't looked at EU for a while, but if that's what you saw, and then it actually made sense for an accumulation, then yes. So daily, you know, it's in the gutter, but the daily and the 15-minute are pretty far apart, I believe, right? So 15-minute times 60 is 900 minutes. So that's only 15 hours. But again, if we look at a 15-hour, if we give it the benefit of the doubt, it's still in distribution. If we even give it more benefit of the doubt and just look at an 8-hour minimum, okay? It's in accumulation, but look where it was when you're looking at that trade. It was below the 200, it was moving lower. Institutionally, it was still moving lower. So everything was still pointing towards bearishness. So no, I don't like this trade at all. Because what you're doing is you're trading directly into a straight bearish market, which means the likelihood of this trade, if you play it out over and over and over again, is this or this. So I hate this trade. I do not think it's a good one, personally. If you're making money doing this, then good for you, but I do not see this as a good trade for those reasons. The market is not in agreement. There's a clash between timeframes. The market is not in a good spot on the validation timeframe or the contextual timeframe. So, and not in a good model. So and even if you force a good model, like to an 8-hour and you go very low, it's still not good. So no, I hate it, right? Because think about what you're doing. You just took a long here, right? Yeah, that's where you took a long. So for me personally, that's not something that I would want to do. If anything, if price was there, I'd be waiting for this to roll back over and start a bearish move for me, right? So again, another example where I would be wrong on bias, but again, I'm going to make money over time because I'm always with the trend. You're going to make money a very small period of the time because you're trying to predict these like counter pushes that might start new moves. I'm not here to predict new moves. I'm here to become part of the moves that are already occurring, right? What's up, everyone? Kinda late. All good, Minty. Happy to have you here, bro. Happy to have you here. The K says, what a boring week for me. Only 2 trades. By the pass, I should shoot like 10 trades. Yep, that's how it goes, man. And I know that the K is a lower time frame trader too, so. John says, thoughts on Bitcoin and Nas this past week. So Nas probably very bad, but we can look at it. So it's like QQQ. So like this past week, it's been quite shit, right? The only reason I've been watching a lot of stocks is because this is still in accumulation or in reaccumulation, which means that if stocks or certain stocks are sailing above the MAs and are very clear, then I'll look to trade them. Hence why I look to trade it long here, right? So this trade is based off of the relative strength of NASDAQ, right? But NASDAQ is kind of bearish here, right? Maybe you could have started looking for something here, maybe. So you might look at it on a lower time frame, and then you do that, and you start getting accumulation. But again, under everything, comes up, reaccumulates, comes up, and again, the only option you maybe had is this one here, this long. But again, for me, this is like Bitcoin, same thing. Very end of the week, maybe a trade. But again, this is not my kind of trade at all. I want to see clarity in this. This is not clarity. This is price going into distribution, starting potential accumulation. And now that it's made its way above here, now if we can do something like this, this is a phenomenal trade. That's going to be a great trade, right? But everything before that, if you take a look at what's going on here, was part of a bearish context or like a not so clean bullish context. Now it's built up at least some reasoning to go long. Now it's above the EMAs. It's in a reaccumulation. So now we can make this move. So on a lower time frame, now is the time to follow, which means that this upcoming week, just so you guys know, NASDAQ, ES, NQ, all your futures of the world and stocks are likely going to have good bullish setups. So if you can find things that are very clear and bullish, like a good context, moving well, NQ, ES, whatever it might be, and then get positioned, that's where you look for the reward, because now you have a real bias on the upcoming week. So now, as we're talking today, you're starting to see how a bias is now starting to be shown to you by these markets. And now, after I haven't watched this thing for a few weeks, right? Since around March until now, May, it's been very ugly. Now it's beginning to show that it wants to go long again. So your NASDAQs of the world, NQ, right? These things are showing you now they want to move long and that they want to take out the next high. And they're showing you that over the next few weeks, they go like this, or like this. They want to make their way to around $19,000, right? Again, play the game. Stage one, stage two, right? Kind of draw it out. See where you are. Figure out where it wants to go, right? Price kind of wants to head towards, again, how do I predict prices that prices are going to go to? How do I know all the time where markets are going to head? Okay, prices are going to head to around 18,725, 19,200, because that's what the markets are showing you now. And now the bias is lined up, the bias is moving, and again, you've created an opportunity where the upside potential, especially on the time frames that you guys might be trading, is super high. This is free money to be made. You can make money in this much of a move and be extremely profitable. Remember that, right? So, last week, Bitcoin and NAS, I think, were very, very bad, very ugly. But now, these things are starting to tell you something. These things are telling you they want to move. They want to move higher. Look what they're doing across a few time frames, right? Daily, reaccumulation above the MAs wants to move higher. A lower time frame, force anything you want. Went into accumulation, jumped up over the 200, is above the 200. 10 and 50 are sloping upwards. Prices now are in institutionally bullish movement. So you can anticipate some kind of move higher or a pause and then a move higher, right? Stage one, stage two, stage one, stage two, stage one. Start of the week, Monday or Sunday, we get sideways. Then a move to 18,200, 18,300. And so the week begins. And we slowly make our way higher into it, or we make our way slower into it. And again, you have a full understanding of how an upcoming week can and should deliver if you're going to get trades. Notice how I know what prices are going to do if I am trading this price action. I'm not sitting here thinking, oh, fuck, but what if it comes down to this price and then what do I do? Should I buy? Like, there's none of that game needs to be played. I know what prices are going to move like if I'm taking a trade out of this. This is what it'll do. Either kind of a quicker stage one, stage two, all the way up through shorter term flush outs, or a larger flush out, larger stage one, that's gonna build new accumulation to move higher. And because of where we are on the higher time frame, we know that it's likely gonna reach for these prices right here. Stage one, stage two, MA alignment, movement that's beautiful within the price action, clear institutional structure being built, clear trades, a lot of stocks looking good. Prices want to go bullish. So our upcoming week, US 100, NASDAQ, NQ, stocks, potential stocks. Here's what they want to do. And when they likely do this, it'll be the same thing as gold, where people look at it and go, oh my God, how did he know? It'll be the same thing as UJ, right? Oh my God, how did he know? I even did this thing right here, August 13th, 2023. I don't know if you guys know what happened that day, but maybe if you're new here, I'm about to break hopefully some minds. Let me try to break some minds really quick. Let's break some minds 1 second. This is from August 13th, 2023. This is August 13th, 2023. Pay attention to this high. I'm gonna make it nice and bold for you. Pay attention to this high, okay? That's this high that I drew right here. Watch. Hopefully, very likely, soon. It's gonna hit, start going big time, maybe break down for a while, accumulate, and take out this high with so much power that Okay? These things don't come from just random drawing and random expectation. It comes from understanding how markets move. It comes from understanding how money wants to enter markets, how money moves in general from reaccumulation to delivery, from larger term flushouts to shorter term flushouts, from stage ones that are long term, sometimes short term, to new stage twos, and then delivery. This is webinar 114. That's August of 2023. Today we are here in May of 2024. And the exact move has played out. We do this on gold. We do this on crypto. We do this on oil. We do this on XXXJPYs. We do this on the most random altcoins that you guys give me because you guys are little altcoin gamblers. And the best part about all of this is, as this was all happening, there were people in our mentorship going, right? This was like, and despite the fact that it's all here in front of you, the fact that this move was predictable from the beginning. Now, again, you know, I could have drawn this out a few ways. This didn't have to play out like this. It could have also, similarly, it could have went stage one, stage two, stage one, stage two, stage one, stage two, stage one, and then delivered, right? And done crazy things. But again, because of how used to things I am, right? It had the stage one, stage two, longer term stage one, and then inside of it, 2, 1, 2, 1, 2, 1, 2, 1. So I said, okay, we're probably gonna have a bigger one, and within that, we're gonna have what? 2, 1, 2, 1, 2, 1, 2, 1, 2. And now what are we having? Longer term stage two. And stage one. And guess what that's gonna lead to? A new 2, a new 1, a new 2, a new 1, a new 2, a new 1, a new 2, and we're gonna be at 165. How did we get there? It must be the interest rates and the fundamentals. No, prices are telling you what they wanna do. They've been telling you what they wanna do forever. All you have to do is look at the price, listen to it, and then follow the action for your setup. So you think Friday was still a bit too early to watch NAS? I just said so. I just said the only time I'm gonna consider it is this upcoming week. Everything past was just kind of shit action. It just became clean, just now. And like I said, the only time you might have considered it is right here. Bagyesh says, you can make money by counting ones and twos on the chart. Yes, you can. This is actually what part of the new course is about. It's understanding that really price only does this. It's not perfect, but this is what price does. Once you understand that and you partner that with MAs and models, right, the game is a completely different game. You start to understand how prices want to make moves. And if you can partner that with a proper market, I mean, it's almost hard not to pinpoint a decent enough entry, right? So that's what we're working on right now. Just so a lot of you know, that's a big focus of mine at the moment. Because, and I'm not gonna lie to anyone here, I'm gonna tell you guys the real truth, and I'm sure you saw this, over the last 4, 5, 6 months of going a lot deeper on stages, models, MAs, and MB based entries, so buy stops, sell stops of an ICI basically, what have you guys seen happening? An unbelievable number of members have begun to get funded quicker, and catching a lot more trends. So a lot of people are learning to catch trends in a very, very, very clear way. And as they catch them, they're not as perplexed or surprised by the fact that the trend happened. Instead, it's more like, oh, I understand why this is happening. And that's a huge thing. That's a huge way to come from where we came originally, which was, zone to zone, up or down, kind of anywhere, kind of just try to figure it out, where the order's heading. And then you start realizing that orders are actually clustered and accumulate or distribute in a certain area and then build beautiful moves from there. So that's where we've moved to, right? And that's why you're seeing us focusing on a more trending based approach now. So that's what I'm building out a new member portal for all of you from. And within it, so even the people that, kind of use different tactics, if they do, it's going to include all the proper stuff for risk. So like, how do you properly risk? How do you calculate actual sizes and stuff in contracts? Because I know this is something that might be small for people that don't really give a shit right now, but this is so important to understand how to properly like calculate risk on any given pair or any asset, because you're not here again to trade one pair, one asset class. You're here to learn how to take in a lot of things under your belt, right? Any reason for removing the 2 mil evaluation from Ment funding? Yeah, we're just not having it on there right now. We'll probably bring it back through a scaling version, but I don't want to talk about it right now because then I get a lot of questions about it. Okay. So yeah. Does Ment funding offer fiat payouts or is it still crypto? I think right now it's just crypto. Yeah, I'm telling you. I mean, Dan's completely correct, right? A lot of people wanted to call, the moves that happened here as a result of whatever fucking fundamentals they can think of. But the reality is we had this move right here. This one, exactly. Planned from webinar 114. And then we had this move here, planned from webinar like 100, okay? And then we had this move here, planned from like webinar 30 or 20 or something, right? This was all the same thing over and over and over again. And now it wants to go sideways, build its either little one or start, right? Same thing. And you're gonna get this move out of this, likely. This is what I'm gonna look for to trade it, right? So a lot of the XXJPY pairs are gonna start coming onto my list in the coming week. In the coming weeks. It's all there. It's all in front of us. We just need to listen to price. We need to allow the price to do the work for us and just show up and just follow a few quick rules. King says 2 sides of trading, making money and keeping money. Right now it's keeping money. Yep. Down says that's where you think you're trading a nice lower time from clean system, but the higher time from is actually a mess, which could be right short term, but long term there's no chance. Yep. Yes. So Christian says Bitcoin 1 hour. Again, I'd be careful with just trying to label institutional structure like this. Theoretically, this is correct, right? But there's multiple institutional structures at any point. There's this one too, right? And then right now there's the formation of this inside one, or like just one leg, right? But already one leg like this of institutional structure is more likely than all these legs that you drew out. Why? Context. Because context is not made up of just the structure, it's made up of models, it's made up of MAs. And what's price doing? And then it's made up of those across time frames. Price is telling you it wants to be bullish across time frames. Now price is telling you I'm above the MAs and I want to get bought up. Now the models are telling you I'm maybe moving into accumulation, okay? And then the institutional structure is telling you I finally made an impulse and I might want to continue this impulse now. So watch out for me. So again, yeah, this could be the structure here, what you drew, but that's not important to us, right? Because remember, it's concepts working together, not individual concepts, just being randomized and then going, well, I guess it's bearish, right? You need to find a way to put these things together. When would you look on the lower time frame to long? This upcoming week. This upcoming week, Bitcoin looks good. A lot of stocks look good. NASDAQ looks good. USD/JPY or a lot of the XXJPYs look like they're going to be good. Or for the upcoming week or the next week. So we're just going to see how it goes. But those all are starting to look really good. iPad says, I loved your S&D way of trading. Much more trades in both directions. So it's fine if you like that. Because the idea of it was nice. Because practically in your mind, all you see is, every day I show up, I can trade, which is fine. If that's something you really want to do, then you can, and you can build an edge from it. But remember, the reason I've refined aspects of my edge is because I found what works better, works more consistently, and works across all markets versus like this random thing that I'm looking for here and there that can create some kind of edge over time. The reality is I find a lot more profitability in looking for a trend, finding that trend, understanding how it's moving with the MAs, being bought up or sold down, how it's stage 1ing or stage 2ing, and then following that price upwards. And then getting in through new MB creations rather than retest, right? That's it. So it's fine if you love that way more, but you might not even know how much you love, let's say, a trend-based system like this one more than that one until you've done it, right? That one felt cool because, again, it came from a time where SMC was very large and everyone thought that they were like some kind of fucking genius because they found SMC. That's kind of where that is coming from. And it is profitable, and I traded it profitably. And all that happened over time is I refined. And refining it led to a much, much more profitable system for myself, right? I made more money with this version of trading. This is the ICI system. And this has been over the last 3 months than I have with the other system. Just remember that. Again, I wouldn't want to change anything about my system unless it makes me more money and protects more of my downside. Take a look at my drawdown in the last 2 months. My max drawdown on this account, despite making about 50% on my account, has been 1.06%. Like, I don't know if this is even a correct number. This seems so low. But also it could be right because of my loss rate and my BE rate, right? This is a very, very crazy thing to think of once you realize it. Like, this is extremely good. Extremely good. Yeah. We did that. Carson says, would it be enough for you in a bullish context like on Bitcoin if it sets up like 1 or needs to be like 2 in the screener? What do you mean by that? 1 or 2? If you're talking about MBs, I don't need 1 or 2. I look at the context of the overall market. King says, Ment, looking at the NQ, 1 minute, 6 minute, 1 hour. I think I know what you're talking about. I think you're talking about right now price action. But the problem right now is that, again, timing. It's Friday close / market open. Those setups don't tend to just deliver because, you know, there's a few other factors at play now. 1 hour, yeah, you do have that accumulation. But again, like, even when I look at this is where the trade should have came from. There might be some validation, 6 minute time frame here. That's looking good, right? Let me see. Let's go like this. Okay. Right, so like right now, we've just been surfing this thing higher. Like, yeah, this could set up for sure. Give it a minute. Like, see, okay, so this is a setup, but this is at market close, so I would never take this to start with because of, you know, spread increases and the fact that we can gap. So this was the trade, or this was the trade. Both are fine, but neither one would be taken by me regardless. So yeah, these are both good longs. They're fine. They play out, and they might play out, and it might even gap up. But I can't take that, right? I can't for the life of me take something like that and expect it to make me money. But yeah, institutionally you're there, you're moving along, moving quite clean. Here was a little bit ugly, but then it started coming up. Nice little reset. Could have even considered a long like inside of here, for sure, right? Moves higher, plays around. This might be a break even based on your rules or a loss. Either one is fine. And then you have the setup here. And if you're late, then you can do that one too. But again, this is market close, so there's nothing for me to do. Again, like the idea of, hey, it's Sunday, it's the last 15 minutes of the day. Is this a good entry? It's like, dude, are you trying to lose money? Are you trying to get like a profit within the next 15 minutes so that you can, you know, at least take something off or manage it? What is the plan there? So again, like, you shouldn't be trading this ever since on Friday this happened. The second this all happened on Friday, you should have walked away from this market. I don't care what it does here. Even if it went boom, 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 it doesn't really matter. This is the last like 15 minutes of the day. There's no reason to trade that, right? That's like trading into the potential red news, right? But it's like me entering this setup, okay? It's like me entering this setup right here right before the market closes, like on this candle, and I'm like, okay, I hope this works out. It's like you're asking for a certain set of things to happen when you do that. I don't know what these measurements are. They look like MBs, but okay. But yes, crypto can easily set up. I agree. Right? It is in a really nice context. I like GBTC more. I just look at the real thing. But yeah, even though it says distribution, this has broken down in terms of very beautiful reaccumulation, right? Very beautiful. So bullishness is still very much potentially going to come out on this thing. And then the start of the week, I'm probably going to wait for one more move up, and then hopefully an ICI to buy stop, at least on the daily. But this could even set up a version where like CSing this is going to work. So like you can CS that, and you might even get a move like this. But yeah, I'm probably not going to CS it. We'll see. Would there not be any opportunities if it broke down, if higher time frame is bullish? I don't trade in opposite directions. Remember, Minty, I do not trade clashes. You can trade clashes. I don't trade clashes. Right? I'm not like, if something is constantly being bought, but then over time, all of a sudden, all the buying, there's a move in comes in like this. I'm not interested in this potential because I'm aware that these buyers, because of what they saw before, can re-step in here at any point. And then I'm wrong, losing money on a trade that I should have been waiting to take long. So no, I, like for the 50th millionth time, am not interested in taking the opposite side of what the money is proving to do. I do not care about the bearish setups on a generally bullish market or a market that I've been following bullish for a while, or on a 50-50 market. So right now, as you look at the screener, you could even say that crypto's entered a more 50-50 bias. So on a trade like this, I wouldn't even want to trade it. The only reason I'm considering continuations on longs is because of the context of this. So no, I don't care about the opposite side. You can make an edge and make money trading the opposite side of the actual trend. There are ways to do that, and traders do that. I'm not here to do that. I'm here to trade the trend, okay? Everyone named Dan who is not the Dan is now fake. We went over this. Suzanne says, isn't it too extended of green box? I don't know what we were looking at. Olay says, on your current refinement, where do you say it is extended? When it seems like the stage 2 has played out. And it's too far above, let's say, a 10 EMA. Like, for instance, that's extended. That's extended. This is maybe extended. That's extended. That's extended. That's extended. This is extended. That's extended. That's extended. Okay? At least for stage 2s. Minty says, for you to start entering, do you need all 3 MAs to be sloping up? No. Marco says, on US 500, EVC equals 1 hour, 4 hour daily. Would you consider this as a good context again? I haven't considered SPX or US 500 in a good context for a very long time. That's ES, right? It's ES. However, yeah, it's shaped up very nicely. So this was very ugly. If you guys remember, NAS was really clean. This one was not. But then it's shaped up. Bad accumulation, or like very weird reaccumulation, so I probably wouldn't have touched it. Accumulation, then here's maybe the first time that I would have considered it. Rallies higher, goes into reaccumulation, and right now, yeah, it looks like NQ. It looks like NAS. So again, same thing as earlier. NAS, ES, stocks are looking relatively bullish and very strong to be bullish. So yes, ES, NASDAQ, US 100, QQQ, stocks, all of those things fall under generally the same umbrella. Those things are likely going to be bullish in the upcoming weeks. Anime Lover says, hey, when trading a minor pair, how do you account for spread? So before I even read the rest of that question, don't trade minor pairs if you're not trading higher time frames. How do you account for spread on them? You look at the spread and you decide if it's worth your risk. That's it. But then he says, do you account spread with a risk calculation? I don't. Or do you adjust your stop loss after the trade is placed? Your stop loss should take you out at the actual stop, not at a random like slipped stop. You need to move your stop loss accordingly with the spread. You're correct with that. If you take a sell or whatever, and you're getting stopped out here, even though price is here, then that should not be happening. You should be getting stopped out when whatever reaches, when price actually hits this high. So you can factor that accordingly. But simply don't trade minor pairs if the spread is very much affecting you. So up your time frame or trade majors. Dan says the total amount of time spent on TradingView this week, less than 10 minutes per day. Yeah, this is so beautiful. Exactly, right? This is literally what my week looked like if I wasn't taking one-on-ones, taking calls, working through a certain number of things with people. And also, just so you guys know, anyone that's here right now, okay, the one-on-one, hashtag one-on-one has free signups, as you guys might know. So like at the moment, just because of the demand for the free one-on-ones, they're 3 months plus being in the team is a requirement. But if you go into here and you fill this thing out, okay, I will reach out to you if we can have a call. I also don't know what the fuck this is. I need to remove that. But fill this out and we'll host a call if we can, if I can reach it. There's already a few, like a lot of people in there, so I'm working through as I can. But the only reason my TradingView time has been longer this week is just because I'm taking a few calls with people. But you can see, like, this is a great demonstration of what's going to happen if you're full-time trading. Like, sometimes there's not going to be a single thing to do. Your analysis is done like the second the day starts. And Shellings, you're completely correct. Buy stopping a 15-second ICI or any time from ICI is a 5-minute or a higher time frame CS. Exactly. That's why when I'm saying, like, if a market's coming up and you buy stop like just this high right there, you're really buy stopping an ICI of a lower time frame, right? So like a lot of you might even consider this as a buy stop. Boom, through the high because it's clear action and you want to take it. This is gonna likely line up with like a 4-hour or a 2-hour, probably a 4-hour ICI, right? There you are. There it is, right? So a lot of you can see that now. There it is. That's your 4-hour ICI. Again, you should be able to see that everything that is taught is a fractal of itself. And you have a way to manipulate that into a very beautiful edge for yourself because, again, since it happens on every time frame and since it's a fractal of itself and since it's a concept that goes in relation to how money's entering the market, you can get into some really, really clear pieces of action like that, okay? And then manage it. Why is everything so choppy lately? Because context is not how it wants to be right now. And because to make money, people need to lose money. And the beauty of a market like last week and 2 weeks ago is that people never learn. And that they will get taken out and they will get weak-handed out and they will get chopped out. New money will come in, new money will pick up the same orders, and off we go to all-time highs while everyone is stuck on the wrong side of the market. Anyone know offhand where the video on CS entry is? I've seen it somewhere. No. Yeah, MK got it. Did you have to watch the whole course to do that? Which one? Who are you asking, Shellings? Minty says, how can I get all the pairs and markets on the screener like Anton? I can only view markets that I select. Yeah. What do you mean with a member backend? Just website. So within the website, you'll have a member area. And there I'm going to have a brand new kind of, 0 up course. So it's all in kind of one little logical, organized manner, Yeah, wow, this looks really good. It seems like when you take a loss, though, it has some real correction. Like, this looks like one loss. I guess you just have a very high win rate. Yeah, kinda. I see. Yeah, it's nice. Roberto says, Anton, how can I avoid or mitigate the risk of taking the kind of losses? What kind? Usually price just wicks me in without an actual break of the ICI. It constitutes about 30 to 405 of my losses. Also, can you go over... okay, so the question's already not making much sense. But you're just saying, I have an ICI, I take it, it wicks me, and then it stops me out. Okay, that's part of the game. Pick your ICIs better, right, is what it comes down to, or wait for a validation with a break. Those are two ways that you can do it. He says, can you go over on how you would consider the MAs overextended regarding the validation time frame? Yeah, if this is the validation time frame, this is where I want to enter, this is extended. This is where I want to enter, this is extended. This is where I want to enter, this is extended. Simply, I want price, usually just on the MAs or just above them, and going somewhat sideways, ready for a new move higher. Anything other than that is pretty much extended. It says he says it ends up happening to me that usually my validation time frame is overextended, not to the point of taking multiple losses, but the move has already happened. Yeah, so you have to learn to start looking in the areas where price is actually being accumulated rather than when price is already moving higher. Mr. Arnia says, go back through these traits to see if there are any common themes and adjust your test to accordingly to mitigate that. Yep, exactly. Get better at spotting the things that make the good entries and the things that make bad entries. Or the worser entries, right? Yeah, like, I mean, even at first glance, like I don't see this as a trade at all, personally. And then the question becomes like, why this trade and not this trade? Think trader 1, trader 2. This is something we've went over in the last like 10 recent Webbies, 10 to 20. And one of your biggest rules, especially being here, is be up to date with the most recent 10 to 20 webinars. Right? I have no information here. That's fine. This is an example of your last public video. In this case, I would have taken that trade. Why? Price never wicked above. Price would have just entered me and taken me out. But why? Price never did that. Just with the stop order. Okay, if you somehow got tapped in, then unlucky. But again, like, I'll account for that. I understand spread at this time is going to be probably like around here. So I'll move my my actual entry up a tiny bit to make sure that I'm tapped in at this price. Because again, I don't care what the spread is. I want to make sure that I'm getting tapped in or out at my actual prices that I'm deciding. Another image here. Right, so like, what is this entry? What are you buy stopping there? Why are you not buy stopping this high? Or this high? Or this high even? Or this high? Why are you buy stopping a random high above price? So by the time you're tapped in, you're already in almost a late stage 2 fractal. All right, so that's what I don't understand. Same thing here. What is this buy stop? This should be the buy stop. This should be the buy stop. This should be the buy stop. All of those ended up making money or breaking even. This one made a ton of money. Yeah. So again, you just need to improve. You need to go over your findings. You need to improve it. It marks in the place that price enters me regarding the spread. Well, yeah. You're on a lower time frame chart, likely trading a CFD. Right? If you're trading QQQ on an actual stockbroker, this entry is going to be right there. But you're not going to be able to risk as much as you're probably risking because you're going to be leveraged at 1 to 2 with a normal stockbroker. But I mean, yeah, if you don't like that you get slipped, or that the entry is like that, then you need to up your time frame. There's a reason you've seen me up my time frame over the last few years. John says thoughts on lower time frame NAS 100 this week. Bullish. D13 says, Anton, can you please simplify the Wyckoff models by using MBs for me? Yes, that's exactly what this entire course is. Here is NASDAQ. This is a reaccumulation or accumulation model. This is the most simplified version of Wyckoff that you could even ask for. It's literally in front of you. You actually have it in front of you, right? This is not only taught, but it's also given to you as an actual tool as being part of this team and having access to the amazing software here. So yeah, this is the simplification. I literally have a rule that if trade isn't part of my analysis, I don't take it. Yep, that's all it comes down to. What's your thoughts on NAS, Anton? Very bullish on it. Manaf says, this happens with me a lot while backtesting. I see the context is right, but there is literally nothing for me to take. Yep. Before I used to think that there was something wrong with my entry criteria, but now I have realized that being in the right context does not mean you get good entries. Good shit. Yes. Yes, yes, yes. Minty says, on US 100, would you wait for a break before getting involved? No, it looks good right now, but it needs probably a stage 1 before it starts to stage 2. The Big Short is the best example of why you should never listen to others. Yeah, it's a good movie. I really love that movie. That was really, yeah, I mean, this is, yeah, I mean, it's crazy good. It's crazy good. A lot of trades, right? But crazy good. Really good stats as well. Looks very good, man. Like, go get funded. Get over here. Come over to Men Funding, bud. Take a smaller account if you need to, but that was an absolutely beautiful curve, man. iPad says, don't you think we target the liquidity lows on US 100? If you want to lose infinite amounts of money, I suggest that you continue watching every YouTube channel out there that you're watching currently. Okay? But Mr. iPad, if you want to improve and follow trends and get involved with price and with the direction of price, please stop following all the dog shit that's out there. Otherwise, and I'm going to give you the best, the absolute best. Okay, are you ready for this? I'm going to give you 3 of the best trades for you personally this week. Here it goes. So for the upcoming week on NASDAQ, what you want to do is you want to find a sell to take out these lows here, because of course they're equal lows. You got to take them out. And definitely don't forget, you want to aim for these lows after. Okay, so make sure you aim for those. So these are all good liquidity to aim for. Okay, good shorts. Hold on, we're not done. Definitely aim for these guys. Those are equal lows right here. Aim for those. In case it reaches this one, make sure you aim for that one. And while you're at it, don't forget about these guys. Perfect equal lows there. So for the upcoming week on NASDAQ, what you want to do, Mr. iPad, is find your first change of character that you see and sell. Okay. Now, very quickly, don't forget on gold, of course, you know, this bullish move is complete nonsense. What you want to do is you see these equal lows, target those first today. Then the next day, target these equal lows. Those want to get taken out. And then make sure right after, okay, you target this trend line of liquidity. Okay. And right after that, just know it's going to reach for these equal lows. There's no way these equal lows here don't get taken out. So make sure you aim for all of these in the upcoming week. Again, simply just wait for the change of character, sell it, and of course, just take it down. Okay. What else is bullish? What else is actually delivering? Oh, UJ? Right. We can't forget about this. So ignore everything UJ is doing. Remember these equal lows back here from when we were bullish? Yeah, target those first, okay? And then these ones, and definitely these equal lows. So make sure you target those, and then later that week you might get a long, okay? So iPad, if this is how you want to trade, you are going to lose all your money, and that's fine. Or you can stop paying and watching dog shit online and listening to dog shit online. You can forget about the idea of equal lows and equal highs acting as actual liquidity, because they don't. And you can focus on following the trends and following the money as it delivers, rather than hoping that price takes out lows or highs, because that's not how you make money, okay? That's as easy as it's gonna be. Okay, let's continue. 8 says, through the countless hours that you have tested the same thing, maybe, just maybe, this might be the reason. Golden Reaper says, Nvidia is also waking up. Yeah. So like I said, a lot of stocks are gonna be really clean. Look at this. As NASDAQ and the stocks are showing longs, look what the stocks are doing. They're telling you they want to go long. Nvidia looks perfect right now for a run. Perfect. This is actually going to go on my list right now. I'm not even lying. I looked at this like during the week and I forgot about it, so thank you for reminding me. This is going to be on my list this week. I'm 100% going to watch this thing for a long. Yeah, looks really good. But Mr. iPad, and again, I don't do this to attack you. I just want to show you the knowledge that you're coming from right now. You know, this week you want to target these equal lows here. Okay, make sure you take them out, and then you can continue the longs. Again, I hope you see how useless this way of thinking is. You need to undo that. Start following the actual direction of price. Please stop following random YouTube channels and random liquidity inducement randos on Instagram. It's just not helpful. You can follow them and pay for them and anything you want, but don't ask me about shit that I literally teach you not to do, because I've seen people lose money over and over and over again trying to do it. Okay, it's not worth your time or my time. Yeah, nice quote. Mr. Onion says, a true mindset shift when you understand what you want to see, and if price doesn't do that, staying out. Exactly. I don't know if you already checked out XXX JPY pairs, but could you do an outlook on them? Yeah, I'm overall bullish. Here's your outlook and breakdown of them. Wait for the stage 1 to occur. Let the fractals of new accumulation come in. Start to get involved is what I'm personally looking for. Fat Tony says, is stage 1 and 2 deliveries theory to Wyckoff, MB, or market structure? It's direct to Ment FX. The stage analysis comes from a number of really good multi-millionaire, 100-millionaire traders within Wyckoff discipline, Stan Weinstein discipline. Is that his name? I think it was his name. But a lot of disciplines that deal with market cycles. I distilled them down to the 2 things that I care about. 2 stages. Because I put on other things, right? So that's all I would focus on. Oh, what? It jumped us to the lower part. So yeah. Carson says, can you explain which is an ICI and which is an inside ICI? They're all the same thing. You can decide that for yourself. I'm tracking to my backtest, but sometimes I have a hard time to tell which is which. So decide for yourself. Otherwise, call them the same thing. But the way theoretically you could do it, but it's all part of the same thing. Like if you have a high, it comes down, makes an ICI. This is an ICI, but it's also an inside ICI because it's inside of this. This is up to you entirely. If you don't see a difference between them, don't give them a different name. This is up to you if you want to variabilize them, okay? If you want to. Same thing with silver. Oh yeah, silver has equal lows all the way at the bottom too. But again, useless. Okay. Nice. Anton, when is your hedge fund coming out? Not for a while. Not for a few years, probably. There's a YouTube short right there. Nice. Thoughts on Bitcoin and Nas this past week? Oh, we went over that. Damn, John, you love to copy paste the same question, don't you? I worked through all questions, guys. Gotta run. Been a great Webby so far. I'll see you, Mitchell. Have a good one, man. Fat Tony says, according to the advice from the last webinar on applying for hedge fund positions, if I want to conduct fundamental analysis, well, no one wanted to hire my highly sophisticated Forex factory analysis, so now I'm stuck with SSC. There's how it goes. So you think Friday was still a bit too early? Oh, I think we went over those. We went over that. Oh, I'm sorry. John, I actually don't think you spammed the question. I think I just read over it, went up, and then I read it again, so I apologize.
This all goes in tandem with your purpose to be the greatest teacher. Let's go, bro. Massive addition. Beautiful. People really think they can gain an edge watching some public Bloomberg news. Yeah, it's crazy. It's crazy. Raphael says, being new to this community and a process process trader with a year in, is there anywhere I should start to learn this new way of trading you have started a few months ago? Should I still start from section 1? You can start from directly webinar 100 onwards, right? But even then, you'll see one of the main things that I still do is focus on the ad-hand institutional action, right? So this comes directly from section 1. And what you're going to see is that, of course, I've simplified Wyckoff. I've simplified accumulation, reaccumulation, distribution, redistribution into 1, the indicator you have, and 2, into the way that we think about ranges, right? But that comes directly from the fundamental building blocks of Wyckoff in section 3, right? So, but also at the moment, as you know, I'm actually working, like in the next week or 2 weeks, you're going to get a starter of a brand new refresh of everything in terms of how we think now, in terms of how we act, because, you know, I don't think a lot of that stuff is fully necessary, but if you want to have a real understanding of, you know, what are you trading? Why is it working the way it's working? Those are really good building blocks. But 100 onwards deals a lot more with this kind of way of trading where, you know, you're looking to buy stop ICIs or buy stop the MBs, which has always been a thing though. Like buy stopping an MB is as old school as it gets. Let's put it that way, right? So everything goes together. You can work through it on your own time or as you see fit. But as I love to say, as someone that's newish, recent 10 to 20 Webbies, if you show up to them and you show up to these ones as you did today, you are already, you know, putting yourself ahead of most of the trading population and already improving in ways that you won't be able to compare within a few months, right? You'll be able to look back at your own journey, at other people's journeys, at where other people are and go, holy shit. The stuff that I know now in terms of what I'm able to understand about the markets and do is unlike anything that I've taken in, right? And that's kind of the goal of having you here, is that you have that realization and then you start to improve off that realization. Because once you learn it once, you learn it forever. So yeah. Thoughts on EC long? So again, a lot of stocks are going to be clean right now. But this one is not. What is this? This is very ugly. Look at the MA. Look at how choppy it is. Look at the 50, look how choppy it is. Look at the 10, look how it doesn't know what it wants to do. Where's the long here? The monthly's bearish. The weekly's bearish. This is the best way to say, hey, the market has told me it wants to go bullish. Other stocks are very clean in terms of how they want to move bullish. The NASDAQs, the ESs, the everything is telling me that they want to move bullish, but let me trade the only stock out there that isn't moving in tandem with any of the other things that are clean. This tells me I want to lose money. This tells me I need to lose money right now. Anton, what is the fastest way that I can blow all of it? That's what I see when I see this. So I don't like it. Look, man, silver starts to set up, as you said in webinar 145. Did it now. Would make a move out of there on the daily and then start going sideways. Yeah, silver's back on the watch list. So look at this. This is perfect. Yep. Made that move away. Just what we want to see. And now coming into a stage 1. And now it's going to start its own 1 in the 2, 1 in the 2, 1 in the 2. Silver's back on the list. Beautiful. I'll be watching that this week as well. Yep, very good eye. Probably same thing for gold, right? Yep, gold is doing the same thing. Again, I think it's cleaner, but same thing, right? Gold is also on the list. Wait, is it not added here? Oh, it's GC. There we go. GC and SI. There we go. Yep, so these are all now on the list. NVIDIA, you know, the NQs of the world, NASDAQ, QQQ, NASDAQ, not oil. Bitcoin is starting to be on the list. You know, like all this is starting to show up now. And it's starting to be clean. Don't need these right now. UJ is starting to clean up, right? A lot of stuff is starting to clean up. Like you should see how last week on Sunday, we looked at stuff and we were like, nothing is doing anything. Nothing is clear. Everything needs time. And this week, stuff has taken some time. It might need a little bit more time, but it's starting to look really fucking good. So as a result, I'll definitely be following some of the things you see on my list right here. But yeah, exactly. You're completely correct. Look at this, right? Webinar 145. Is silver clean? No. I want to see it come up and start going sideways. It starts to come up, it starts going sideways. This is now where I want to be part of this potential move through the next high, and then it will explode. Again, how is silver likely to move? Can any of us guess? Price is probably gonna now get accumulated or fall down, then get accumulated. Either one works for me, don't really care. This can easily happen as well, and that means that price may set up in one more week, right? That's perfectly fine. There's nothing wrong with that. But then it's gonna start to move like this, and then it's gonna explode or probably like stop, and explode right through that high, right? Because that's how markets move, okay? And those will be opportunities to enter again. And again, that's all part of a multi-time frame. Look at this. This is like, this just started this stage 2. This thing wants to move like we went over the last few weeks on gold, on UJ, on the last few months. This wants to move up into the $30 to $35 range. It wants to get up there, and then it wants to either pause or push, right? Because again, if you've noticed this, is though monthly, a weekly is just started a stage 1. So another stage 2 could probably reach up to $30 minimum, right? Pause, and then off we go. So again, you should be able to see how prices want to move if they're gonna make a move. It's like in front of you. It tells you what it wants to do. And now all I have to do is find a way to get into this, right? As it starts delivering my direction. That's it. And notice how equal lows, oh my God. You know, this is useless. Please don't be the trader that does that. You want to know what every trader was doing here and here and here, and is now going to be doing here and here and here. Everyone wants to go short, to take out lows, and to get short because it's so extended. It's never been this extended. Look, it's above all the support resistance. Oh my God. Let's go higher. Welcome to MenthFX. We're going higher. John says, I'm a bit confused. In the past, I've seen you ignore bearish models on the mid timeframes based on bullish overall context and bullish models and price on your entry timeframe. You permitted this because no one timeframe was your end all be all. That's correct. Do you now wait for everything to line up? No, I want everything to line up in terms of MAs and context. The models don't have to always be exact, but when there's a true clash in terms of the delivery of actual price or institutional structure, then I don't want to touch it. I saw you consider 15-minute longs in a 1-hour redistribution while the 4-hour daily were reaccumulating. That's fine. This sounds like a bullish market. So I've been ignoring bearish 4-hour, 1-hour models if the 45 starts lining up for longs. But you can't ignore them. It's not just about the models. I think you're forgetting that we don't just use models. We use models and MAs and structure. And we do that across timeframes. And if something now clashes in a large way, then I don't touch it. Was this? Oh, CS? Yeah, there you go. Nice. Hello, Anton. This is the first live webinar. Whoa. As I'm going through the webbies and content, now what I'm curious about is as follows. I saw you do so many insane trades on the older webinars. Okay? Going back and forward, capitalize on the up and down moves with the understanding of how the market moves, but using the SSC across timeframes. What is the main reason you don't use SSC anymore or trade like you used to back then? It's a lot more profitable what I do. A lot more refinement, a lot more time gained for the time that I spend, a lot less drawdown in terms of what I do, a lot more opportunity because I have more markets to trade, and that's really it. And yes, you can go from 100 onwards. Like I said, my main focus right now for everyone here is to recreate the member area into specifically thinking in terms of this, and thinking in trend, and thinking in buy stopping demand, or buy stopping MBs, or sell stopping supply, sell stopping MBs in terms of trend. That is my main thing right now. CS is just an entry method, and the simplest definition of it is to buy stop a candle. That's it. If there's an up candle and you buy stop it, that's CSing, basically. Like a good example of like, so again, this is not a system I use, but I had a one-on-one with someone where I was showing them that, you know, you can start at a simple spot. And all I told him was, okay, if you go back to gold when we first started saying that it's going to be very bullish. So this is where we started to talk about the bullish context on gold. All I told him is, instead of complicating anything, all I want you to do is, when you see a larger up candle, which might demonstrate that money's coming into it, CS it. That's it. And then CS it, make a larger stop, and look at 1 to 2 or 1 to 1.5, right? That could be a simple start. So you wait for an up candle within a bullish market condition, right? You even, like, this might not even be enough for you. So you wait for a larger up candle that's clear, okay? This could be something that you use, or this one right here, either one. And then you buy stop the high as a CS. Now, I wouldn't do this because, you know, this is far extended from the MA. But even if you kept something super simple like this, 1 to 1.5, 1 to 2, whatever, you could still do fine. Let it reset and do the same thing. Wait for a candle to come in, just like that. Take the buy stop through the high, CS it, put the stop under the low, look for a 1 to 1.5, right? Your system can be as simple as a starter like this, and you could, in trending markets, make money doing that, right? You don't have to complicate the system at first, but over time, you're gonna find refinements that you can make with your own system. You'll have rules like, hey, how far should it be from the MAs? Is it okay that it's this far extended or not? Whatever it might be, and you can improve your entries by a big effect. iPhone says, I like Anton. Okay, that's good. How is the hedge fund coming along? Not yet, bro. No, you don't even have to worry about that for a few years, probably. What was the conversation about mini hacks / futures? What do you mean? Good that market is choppy. Clouds of liquidity being created. Yep, exactly. Sapir says, at Shelling, some of my good ICI buy stops are triple M's and a bit higher. Yep, exactly, because they're all fractals of each other. Works calling us to go. I'll see you, Jerry. Thanks for being here, man. To create your new coursework, did you go through old videos, or are you working from scratch? Well, it's, again, so Shellings, everything taught has always remained under the same guise for the most part of how the conceptual is approached. It just changed in regards to what we're looking for now and how we look for it. So the new coursework is going to take the 3 main things that I use now, MAs, models, structure, and work from there. Minty says, if the 4-hour or 1-hour MAs are extended, would you still look for entries on the 15-minute? Again, the validation time frame, I don't want it to be extended. Context time frame can be extended sometimes. New coursework that focuses on this trend-based system from the get-go. Yep, exactly. Anton, you said that you don't like trade in opposite direction. That's correct. But for example, if you trade a 15-second or 5-second, would you trade Euro USD in buy direction since Wednesday last week, or no way? It depends on EVC. Do the math. If these line up or are lining up in a certain way, then sure, you can trade them. But as I love to say, I'm personally interested in the most clear context, which means that I'm using the screener to determine if it's even worth trading. So at the moment, if I'm trading a super low time frame on Euro USD, I know for the most part, a lower time frame should create good bullish setups. So if I'm looking at a 15-second entry, I'm looking for, or a 5-second entry, I'm looking for my validation time frame, which in this case would be what? 5, 10, 15, 20, 25, would be 30-second. I'm looking for 30-second to be very bullish, and I'm looking for my context time frame, which is a 5-minute, to be very bullish. So on Euro USD, all week long, the main thing that I'm actually looking for, if I'm trading this during the week, so where's Monday? Monday is here. All I'm looking for at the start of the week is ugly, 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 potentially ugly, still ugly, no accumulation, so I'm ignoring it because, again, I want to be as in line as I can be with the current lower time frames, which is bullish. Probably wait, goes into accumulation, wait for a reaccumulation, there we go. Around there, right, I'd be interested in starting to look at those lower time frames. And then from there, you can work your way down, wherever it is. Where is it? Right? You can work your way down, and you can start to trade the validation entries, because they begin to become accumulation. And from there, once again, okay, that's where I'd be looking for my based entries. Now, again, you shouldn't be doing this unless you have a really low account, because you're going to be getting slipped a fuck ton, right? For no reason. So this is up to you personally if you want to get slipped. But price moves higher, you can CS through that high, or ICI it if it goes sideways, protect the low or DMA, right? And look to take it higher. There's the CS. I mean, not CS, sorry. There's the ICI, because again, you're entering right above, right? So this is where you have to enter, stops there. Okay, you get tapped in. You move to break even. Okay. You wait for management of this. Was this 1 to 2? So you take off a partial under this low, just like that. That will be a partial, so you secure plus 1.15. Again, no commissions taken into account, but that's fine. Let the rest run with the MBs if they set up. Nothing yet, so you have to wait. Move the MB up. Double MB rule. Wait for another. Since it's up here and I have no reason not to move here, I'll protect more. Right, again, like you just follow the same rules. You wait, and price stops you out at plus 1.5, which is plus 0.75, right? But then you make less money because you have commissions and spread to pay for, unless you're trading a much lower account, in which case this is probably accurate. And then you repeat. That's what you do. So again, Artem, stop thinking in time frames, start thinking in EVC and partner those with screener. Okay. Right, and that money was made here. So again, repeat that process over and over again. And yeah, you probably had a really nice week on a lower time frame. Roberto says, Anton, how can I avoid or mitigate the risk of we already went over that. Can you look at UK 100? I'm assuming it's probably like NAS, but we can take a look. Yeah, I mean, it's straight up. There's nothing to do right now. You have to ignore this. If you didn't trade it in these areas here, you can't really do much on this thing. Yeah, I mean, it already gave you the setups, right? Now it's moving bullish. Yeah. It's definitely bullish, but this is extended. Your entry should have been in here on a lower time frame if you were trading this. Otherwise, if you're a daily trader on this, your entry should have been like here, right? As it pushed up higher and then built up that range and then took off. Yeah, now it needs to go through a new stage 1 before new stage 2. So again, iPad, I don't know who you are, because that's, I mean, it's not a good name, because clearly you're just logging in from an iPad. But you need to work through the content here. You need to start showing up to the webinars, even work through the recent 20 webinars. You'll learn instantly why what you're doing is not really in line with anything we do. But most importantly, you have to stop wasting time on the stuff that you're finding online, because that's where you're getting that info from, clearly. You need to not do that anymore. And you're going to improve very quickly then, so. Because NVIDIA makes nearly 7% NAS. Oh, nice. Imagine iPad actually took notes of those lows and didn't get the sarcasm. But yeah, there's no point in trying to predict what lows are going to get taken out. There's always equal lows under price. There's always equal lows under price. And then the next 3 months were build up. The next year was build up of accumulation and then took off. If you're focused on this, you're going to lose money, right? Which is an inside ICI and which is an ICI. So like I said earlier already, you can define them for yourself. These are all ICIs. All inside ICIs are ICIs, whether you want to call them that or not. Now personally, like, it's up to you how you want to define them, dude. Like, you could call this an ICI, this an inside ICI because it's inside of this, right? Like I said earlier, this, you could call it inside if this is what you saw, or if you see it as its own setup, then it's an ICI. This one, if you see it as an inside, then it's like that. Otherwise, it's an ICI like that. This one, it's either an inside ICI like this, or it's its own ICI like that. Okay? Same thing goes. Inside, its own. Again, you need to define it for yourself. It's not going to matter how I define them because that's not what's going to determine the edge you can pull out of taking specific ones that you are finding, right? Can we please look at HG? This thing's stage 1, 2, 1, 2, 1, 2. I think this is gonna, I would wait probably for a deeper one. Like, I want to see this now probably do something like this. It probably needs a week or two because it's had multiple stage 1s and 2s higher, so that's multi-ICI, which usually leads to longer term sideways. However, and I mean the 10 is like straight up as well. Like, you want to see at least minimum this, I think, here. But let's go a little bit lower. So choppy on the way up, but that's okay. Got a little bit cleaner, reaccumulated higher, and then re-broke down. Yeah, this looks like it needs time. Yeah, I probably would not go lower. I'd wait for I'd give this a little bit more time to probably come down and then start making an accumulation. Choo-doo-doo. This is in very late stage 2. I think this needs a little bit of time to go sideways. Everything about this is basically telling me right now that it needs some time to accumulate. It's made a very large move from this, and then since then it's already given multiple opportunities on the way up. 1, 2, 3, 4. This would be the 5th time. Unless it resets deeper. I'd want to see this reset probably a little bit deeper. It probably needs a flush. It probably needs to reaccumulate. However, you know, based on rules, I mean, never reaccumulated. Reaccumulated here and then failed to keep going and instead rebroke lower. However, maintained this overall structure, and at the moment is on a little bit of a choppy 50, but just enough that it's okay. I think if you can, beginning of the week, let it break down a bit, catch itself, and then from there, if the 5 minute does accumulate and starts an accumulation, you could try it a few times right here, like once or twice, for a potential move like that, or one that maybe comes up to like 4.6. But I honestly, just looking at it, first glance, it's just telling me it wants to have a deeper reset. So I would wait for it to reset a little deeper, probably just let this 50 catch up a little bit, or let it start to move like this. Like just a little bit more sideways. And then from there, you'll probably get another leg. I don't know. This is just something about this is saying that it needs some time. Yeah. Did you look at AU? Lower time frame bullish, overall kind of 50-50. Let's double check that. Yep, I don't touch this. Just like last week, just like the week before that week, just like the week before that week, and just like the week before that week, before that week, before that week. Another question, Anton. Could we say that if the context time frame is not overextended, the validation time frame is allowed to have a smaller stage 1? Of course. I never said stage 1s or 2s need to be large or small. It just depends on how many it's had before. Yes, smaller stage 1s are fine. Prices often do have very small stage 1s, especially if they're very bullish or very bearish. Priscilla says, it's my first webinar and I kept up with everything, watched all of YouTube. Good. That's exactly the idea, right? You show up to a webinar, things either make sense or they don't. If they make sense, good. That means you're already in a really good spot. Work through the recent 10 to 20 to get an idea of what we've been watching, how we've been watching it, where the psychology is, what mistakes people make, what mistakes people don't make, what kind of trades am I taking, how am I taking them. Begin the test, get really good at what you're doing, and then start doing it yourself. Because that's really all trading is. Start looking at things, start following things, keep them on your lists, watch things on your list, develop your lists, and then follow them as they set up. Yeah, if anything, Nvidia's like even slower than other stocks. Like Carvana has just been fucking insane, right? This thing is just gone. Bagyer says, I think one of your entries was shown in section 4 was different ways to buy, stop, and MB. So everything we learned from day 1 gets used in different parts. Exactly. One of my very early setups was this. Okay, I'm not even gonna move the stop, but double MB buy stop. A lot of my entries now, if you really pay attention to the rules behind each entry, if you just pay attention to what's going on, okay, you might notice a few very interesting things. If you pay attention to any of the entries that I've taken, okay, you might notice a few very interesting things. Okay, if you notice entries that I have taken, you might notice, a few very important things. This is a 5-minute, sorry, here, I'll find it for you. You might notice some very important things. Almost every ICI entry now, just looked at from a little bit of a different perspective, ends up being a double MB on some level, on a fractal, on an intermediate, or something along those lines. This is something that was taught from week 1, basically, of everything. It's just that I've refined the way in which I find them. I tend to spot them through the usage of MAs now, and through the confluence of context. MA's cutting through price, it's an instant no for me personally. There you go, right? DJTWW. 4-hour daily, 1-hour entry. So starts off, accumulation, goes into GameStop kind of situation, but then does make its way above the 200, accumulates within the 200, takes off, fails to keep taking off, reaccumulates, starts kind of coming higher. It's a little bit weird. I mean, maybe, but quite choppy here. So already don't like it for that reason. Get to the 4-hour. You're looking at a generally more kind of e-liquid, a lot of chop. It's in accumulation within the same range, so you don't have really buildup of good ranges. I don't usually like that. I often like to see ranges. Hopefully my 1-hour for the entry has ranges that I can work with. Okay, it does, thank God. Right, starts clear institutional push, larger reaccumulation, starts an accumulation, blueprint / stage 1 into this move higher, stage 1ing now off of a clear, actually pretty clear reaccumulation. A little bit ugly in here, but that's okay. This got really choppy right here. So it's kind of agreeing across timeframes that it may be, but chop. And then the others, you don't have clean ranges. So, you know, this is not my kind of stock to trade, but, you know, if you like it, then run it up. I mean, it has the chance, it has the potential to go into a move here for sure. There's nothing stopping it from doing that, but I personally prefer cleaner ranges. This is not telling me like the range is super clear that it wants to do this. This is a harder entry for sure. Because like if this didn't have these little random candles here, this might have been okay as a buy stop, but it does, which means like this is the high then, but then from there it insta-gapped all the way back down and is now coming up, which means that if it buy stopped in, it would be after multiple up candles now. So this just tells me that it wants to do something like this, right? And I don't really like to trade stuff that might do that, so I would ignore. PL Platinum is looking like it's in a good context. Are you sure about that? It hurts my eyes almost with how unclear it is. Look at the 50. Does this tell you money is coming in a uniform way that's clearly being bought up at some point? Or is it telling you that money has no fucking clue how it wants to enter this? Positions are being taken on longs and shorts right now on behalf of large money. This is telling me it doesn't know what it wants to do. I would not trade that. 4 hour is in clash mode, very large reaccumulation. Started to come up the right hand side and is wicking very heavily. 30-minute is delivering in the most horseshit way it can off of a potential blueprint into whatever this is with chop. Yeah, I'm not seeing platinum at all, man. This is not my kind of market. This is very ugly. Like, here's what's interesting, ready? So this is a market you're considering. Take a look at the daily, okay? Remember it. Remember what the MAs look like. Remember what the ranges look like. Remember what the market looks like at this zoomed out level. Now compare it to the stuff on my list, ready? Compare 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 to the stuff on my list. Compare to the stuff on my list. Compare to the stuff on my list. Right? It should be an instant. Right? Like, where is the similarity? Right? Like, imagine I gave you a quiz and I said, you will die if you get this answer wrong. Okay? Let's play the game. Okay, let's play a game. I'll just do a few of them, okay? Right? It's like, why do you think I tell you to collect data? And why do you think I tell you to take images? Okay? Please, just for the sake of this example, please find the odd one out. Which one's the odd one out in terms of context of a higher time frame? Right? It should come with 2 seconds to you. But again, the reason it doesn't come in 2 seconds to you is because you very likely, so 16122, it's very likely you haven't even collected maybe 10 images of a good context with 10 good trades. That's it, right? So as a result, you know, you look at a market like this and you're like, damn, but maybe you can make a move. It's like, look at my maybes, look at my maybes, look at my maybes, and look at your maybe it makes a move. Take a look where these would be heading if they're making a move. Take a look where this is heading if it makes a move. Right? This should be the instant, me answering this right now and showing you this should be your instant, you know, go-to of saying, holy shit, I need to start journaling. It's insane that I haven't taken images yet. Right? It should be breaking your mind that you haven't taken images yet. Look at what this is doing. Look what this is doing. He said for the lower time frame entries in 30 seconds. Maybe then. Right, that was not specified to me in any way. You just said, what do you think of this from the daily to the 30 or something like that? So it's terrible. Maybe there's something there on a lower time frame, but you know, even if you're on a 30 second, what are we looking at? Like 5 minute as your context time frame or something? Okay. Well, this isn't pointing towards bullishness. So 15 minute isn't yet pointing towards bullishness. It's in multi back and forth in distribution. So again, like, this is why you take images, okay? And then the main question I would ask is, would you rather be in on a 30-second long on this or on this? This is gold. Which one do you think you'd want to be part of? Otherwise known as GC, right? If you like to trade the futures markets. Which one's telling you that it'll likely give you a move that then continues? Is this one telling you it wants to make a move, or is this one telling you it wants to make a move? 1 or 4? Right? It is cleaner on gold, exactly. So don't waste your time trying to lose money, right? There's no point. It's useless. We are traders that work for ourselves. We get to choose the markets we trade. There is zero reason that any of us should be forcing things on a market that is suboptimal, especially if we know it's suboptimal, just because we really want to trade. Can you look at AU? We already looked at AU. And for me, I'm not touching AU. It looks very ugly. Order fill, I'm in short. Nice. Gotta go. Thanks for another valuable webinar. God bless. God bless you, bro. Thank you so much for being here. Yeah, this is Zoom. This was in an older webinar. I said this thing just wants to go bear. Somebody asked me if they should be buying this thing. I shit you not. I believe in a webinar, like, I don't remember which one, but someone asked me, what do you think of Zoom? Like, is it bullish or something like that? It's like, or can it make a move? I'm like, dude, this thing is telling you that it wants to just go to crap. And then it did, right? I think the question on it, if you notice the price, small range, when did this come from? I will find it. I don't remember. I don't remember. Is it there? No. I don't know where it was, man. I don't remember. But I was asked about it. And I said this thing was going to crap itself, man. It was just going to crap itself, and it did. And it crapped itself quite beautifully. Okay, I don't know where it is. I don't really care. It's fine. Zoom is bad. Okay, and it's still bad. And it was bad, and it's remaining bad, so don't touch it. I'm gonna head out now, guys. See ya, Minty. Thanks for being here, man. Thanks for answering my questions earlier. No problem, man. I can feel the hands of people that are getting sweaty thinking how they'll backtest one candle system this week. Backtesting one candle system. Yeah. Update on the stock screener. It is being updated and worked on. That is the update. Christian says, will you include more filter functions? Yes, we will. It is one of the main things we're working on adding right now. How do you know when it's extended? You have a number of ways of knowing if a market might be extended. It can be through the moving averages. It can be through an understanding of stage 1 and stage 2. And it can be through multi-time frame of those exact things too. Watch webinar 120 to current to know what's in inside ICI. Sure. How long do screens take to upload? What do you mean by that, bro? Asking what an inside ICI is like asking what an FMB is. Yeah. I really like the inside ICI setups, but often find that the inside impulses are smaller and don't always create an FMB body break. Should we avoid those? It's preference. That should come from the testing for sure. Would you ever go back to your old way of trading, of just getting involved with SSC? Or would you stick to this MA movement? What do you think is the answer to that question, bro? Based on what I just said earlier regarding my profitability, my ability to trade more markets, my flexibility, my ability to gain more time now to do whatever I want, my ability to make more money, my ability to have less drawdown. What do you think the answer to that is? Suzanne says, just want to know, what's a major difference between options and future Forex? Options are bought and sold differently. Futures and Forex are two just different asset class types, but they are just markets. The major difference between all three of those is more so between the option and the other two, because an option is a sub-derivative contract of a stock. The main differences is just understanding how to manage and look at risk between all those things and calculating. Gotta go. Have a great weekend, everyone. I'll see you, Lodzic. Thank you for being here, man. David says, I already have my EVC timeframes chosen, but if I'm trading a 1 minute entry, what's the highest timeframe on the screener I should be looking at? Well, I mean, do the work. If you know your EVC, then you know it's 1 minute, 6 minute, and probably what, 1 hour, which means that everything in this basket should be up to the higher. So probably 2 hour, maybe a 4 hour. You could even think of 8 hour or even a daily, honestly. 30 minute, 15 minute, and same thing goes here, 15 minute, 10 minute. So again, if you have a screener with a general of these timeframes, you should be good. Can you look at CRWD? Yeah, it looks like it can make a move. This is a lot uglier here for sure, but it's starting to enter accumulation, which is always a good thing. This has entered a blueprint, started its own institutional move. Yeah, I mean, this can make a setup this week too. Yeah, it looks good. Looks fine. Yeah. Nothing wrong with it. Starting a nice little stage 2. Just went into a stage 1. Right out the rising MAs. Yeah. It's like the other stocks. Same thing. Yeah, I mean, this is great. Go get funded, bro. Hit me up when you got your certificate. Let's get you taken care of. This is great. Costco. Yeah. Looks good. You can, they all look the same. Like, you should be able to see this. This looks like Nvidia. It looks like CrowdStrike. Started the institutional push. Played around. ICI'd. Beautiful move. Yeah. I mean, this already started this move though. So like, CrowdStrike is around this area right now. Right? You want to, on CrowdStrike, you want to wait for like this setup. This is perfect. Yeah, Costco had a move. You should be in this if you've been watching it. It's a good one to watch. Anton is in the fuels today. No playing around over here. Who are we playing around with? Jacob says, at the beginning of backtest, I forgot to put a stop loss, and right now I can't really say what's my risk of ruin. What do you mean by that? You don't need a stop necessarily to know your risk of ruin. You just need to know if your stop got hit. Do you think if I create a new sheet and backtest, they're like 100 trades, can this be my risk of ruin, or is it better to put there more trades? Yep, I agree with Dan's answer. Yeah. So again, like coming back a little bit to what we discussed a second ago, you need to be able to take images, because like notice even with 4 images how quickly we're able to differentiate which one is going to have likely the worst possible delivery or worst kind of move, right? Pay attention to the ones that I have traded. Pay attention to the one that I haven't even considered. And then you look at this and you instantly start to realize, hey, I'm going to collect some data because, you know, like I can take 2 seconds now to know this is not a tradable market. Anton, once you have a watch list for the week, do you add more pairs during the week or just stick to the ones you had earlier? I would be adding and removing probably a lot more if this right here had more functionality and more markets, is the honest answer. Because it doesn't, my current watch lists tend to just remain the same week after week, month after month, unless something is just so ugly that I just remove it. But yeah, once this is improved and has more stuff, I'll have stuff added and removed during weeks, basically, is the way I think about it. Thoughts on 4-hour ELAL longs? Yeah, beautiful accumulation. Blueprinted off of a larger reaccumulation, even though it broke down, but then started a blueprint higher, reaccumulated absolutely phenomenally. This is where your entries should have been, but now it can also make more here for sure. So I'll start with the weekly then. Yeah, you have blueprint accumulation right now. I mean, this can easily make a big run for sure. The entries were better inside of here, but that's okay. Accumulation, even though this is in redistribution, I would argue this is reaccumulation, which is fine. Start to move higher. Yeah, I mean, this is a fine entry. Through that high. It looks good. If you took that, then I think that's a good trade. I like it. I'm not against it. I like to start taking looks at lower time frames when I take stuff, because it helps me get used to more price action. But yeah, this is a good trade. If you're in that, well done. Right through the high, just like that. Protected in here is fine. Can make a move for sure. Overall accumulation, reaccumulation. Monthly, you're in distribution, but it could also be large reaccumulation / short-term accumulation, especially with where you are, so that's fine. Just came up over. Yeah, I think it looks good. Now, what is this? The Tase? What is Tase? Tase. Israeli market? Is there like an Israel index? I don't know. I mean, it looks good. I think it looks good. I don't want to look at a comparison of like the actual Israeli market, but if we look at the US one, right? At the same time that, in March this topped out, came down for a big flush out in April. It's kind of the same thing, right? March it topped out, came out for a big flush in April, started to come up, and just with the general market, it's kind of just done the same thing, right? This has just come up over a high, This has made a larger push already, but is now not taking out the high. So like it moves with the market, right? So if NASDAQ starts going down, this is going to go down. If my NASDAQ starts going up, this is going to go up. So really in that scenario, you might just want to trade the NASDAQ or something else that's stronger than this, right? Because in comparison, right, NVIDIA is moving with NASDAQ in terms of taking out the high and moving higher. Carvana is like just taking off. So like you want to trade the stuff that is more in line with it. Otherwise, like if the NASDAQ or the normal Israeli one goes down, then the ELAL is also going to go down. So PBA. It looks very ugly at first glance. Yeah, very ugly. Very ugly. Yeah, don't know what we're looking at here, to be honest. Looks very ugly. Is fast break even only good for futures or also for FX? Now that's the kind of question you should know I hate for a certain reason. So I'm going to ask you what the reason is before I answer it. And then we're going to answer it. Okay, good. So Ole knows the answer. Yep. All the markets are the same. The contextual elements of the markets are different. If I have a system that breaks even fast, I will apply that system to whatever I'm trading, right? The second you start to think that different markets or asset types are different in terms of break even or any of this, that's the second you start assuming or start trading along the lines of, I'm a gold trader only, and I only trade gold because gold is the cleanest pair in the world. Doesn't work like that. There will be times where futures might go into long-term chop. They haven't for a while because a lot of NASDAQ indexes that are based on the futures move well. But they could go into chop. And at that point, UJ might go on a crazy run. Great. And then you have different trending markets. Thanks, Anton. Gotta go. Have a great and profitable week. Thank you, D13. I'll see you, man. Still working on it. Looking to add 400 to 500 more. Can't scroll down. That sucks. So much lower win rate system, but it seems like you have a much higher RR system, which is good to see. Okay. I mean, I can't see anything here, but I think it's probably good. Going to hit the road early. I'll see you, Shellings. Good to have you on here, man. I'm new to this upgrade to the MetaFX system. Are stage 1's accumulation distribution and stage 2 markups? Yes, they're kind of like fractals of them. Yep. To put it simply, that is what it is. Thanks for the webinar, Anton. Gotta head out. Have a nice and joyful evening, everyone. See you in the chats. What's this? That's me. And Christian said some crazy shit. You shall not make for yourself a carved image or any likeness of anything that is in heaven above or that is in earth beneath or that is... I don't even know what that means, but that's all good. MSCI, I think, is the index. Of what? Give me some random shit. The Israel index is TA35. Now that seems like something that makes more sense. Okay, cool. So yeah, this entered accumulation, started a very nice move, right? Right now is in larger term stage 1 and shorter term stage 1 just took out the high. So yeah, this looks like it's prime for a move, right? So if we go back to the other one, ELL. Okay, got it. Yeah. So like, look at this, right? This thing has actually a lot more strength than the other one. So this trade would be really nice. Yeah, exactly. Okay, good. Man, why don't you drink Red Bull anymore? I do. I love Red Bull, but, you know, it's not as good for you. Also, Red Bull doesn't have a chart, but that's fine. So Ole, you asked the question because of commission, not because of movement. Okay, and that's fine. Yeah, if you find that commission costs for you are too high when you trade an asset like Forex or a shittier altcoin or on a crypto exchange, then what do? You don't trade those things because clearly when you pay what you need to pay to trade on that asset, then you can't do it, right? Or up the time frame so that you pay less commission associated, less slippage associated, and if you're able to trade it, then trade it. That's a different story if the cost of trading on a certain asset eats away at you. Then of course I understand. So during a clear proven stage 2, you can just spam buy stops and instant BE and eventually catch a run for free. Theoretically, yes. Can you go through this? I can't go through everything in your system, but we need to fix this a little bit, as it looks a little bit like you just put them on top of each other. That needs to be moved over. I mean, yeah, it looks fine. Looks like you have a higher RR-based system. And when you get the runners, you get to all-time new highs. I don't see anything wrong with this at the moment. There's not enough trades at all. 25 trades is nothing. But if this is based off of already a backtest and you're forward testing it now, then it's a really good start. It looks solid. 9 wins, 17 losses at all-time new highs. System that's going higher, yeah. It looks really good. Yep. Looks solid, man. I don't see anything against it. It don't have anything against it. Okay, guys, let's wrap this up. How deep are we? Okay, we're pretty deep. We're about 2 hours 30 minutes, 2 hours 40 minutes, so we are gonna have to wrap this up. But as per today's webinar, you guys know in general what my eyes are on. A lot of stocks. I'll probably do another look through stocks to see what's stronger than the others, than like NASDAQ, to see what I should be watching or what I should keep an eye on. A few of you guys named some good ones today, but generally these orange ones you see here are going to be on my list this week. I'll be watching them here and there. UJ is starting to set up. GBTC potentially can start giving you moves. NASDAQ, definitely NASDAQ in the move of potentially going along. Cleaner than a lot of other stuff, and anticipation is to reach up higher. Gold, you kind of have the same thing. Might need some time, but starting to do it as well. Silver, same thing. Might need some time, but starting to do it as well. So a few markets starting to show up. A few markets starting to show that money could come in and start delivering very nicely. So eyes are going to be on that, okay? And that's really it. I'm going to continue working on making the member section for everybody this week when I'm not trading, and get that out to everybody here as soon as I can, even if it's just a basic starter, okay? Thank you all so much. I appreciate a fuck ton the fact that you guys take time out of your days to be here. And now, let's wrap this baby up.